Hey everyone, so I'm gonna try to do this as fast as I can. It's getting later in the night, so trying to make sure we get this out to most of you guys, so you guys can review this video. I'm gonna talk about internals, and market internals will tell you a lot. Okay, it will tell you how the days are going, the direction one way or another. And the sentiment of the market. And so here I have today's, and we can rewind back to other days when you see a market that is really strong one way or another, so that you'll see exactly what I'm talking about regarding why I say today was just buy the dips, and you can buy any dip. So first, let's explain a little bit about internals, okay? What internal does, it gives you a broad, or not specific stocks, but just every stock in general, with the New York Stock Exchange and the NASDAQ. And it gives you an idea of what everything is moving, how everything is moving along. And so, for instance, okay, I always have my chart. I call this a quad. Quad means 4. So this is my quad box. And my quad box always have future ES, which is the mini futures, just to give me an idea of exactly what the day is going, right? So here I have basically the ES with all the moving averages, so that I can understand exactly what we're up against. Like today, the ES keep on hitting the 50 MA, so that tells you that it's either trying to break down or break up, and it's still hovering right at 50 MA. But market internals was very bullish. Okay, so, and why I say that is, let me first give you an example, or explain what each internal means, okay? In simple terms, basically this here, if you go into your chart and type up $ADD, this is called advanced decline. Now you can also get it in Thinkorswim. You just need to go into your ad studies, okay, and you just need to go down to advanced I believe it's here, yeah, advanced decline right here. But in the end, I'll show you how to get better. This is just very general. Thinkorswim don't have a really good one, but you can just kind of add it from here, okay? So just for now, but you can also go in and type in $ADD, and it'll come up for you. Okay, so if you go here and you go to chart, and I'm gonna go to my chart here, and I type in $ADD, and it comes up, my ticker for the day. Now this I have 5 minutes, so it's very, but you can see here's your zero line, here's your, so it's the same what I have over here, except in my regard, I don't have all the trend lines, okay? Because I have a specific study for advanced decline. It looks exactly the same as you can see, okay, for today, but it doesn't have all the Bollinger or all this stuff here, because I took it away. And then this is your advanced decline line. And this is, again, this is basically, it's called your breadth, okay? And I'll explain what each one of these mean. And you can go in and type in $VOD, and this comes up your breadth, okay? I know what this is. Disregard this, but this is your breadth, okay? It's the same as what I have here, except I have to mark the zero line here, okay? So and then of course the tick, the same thing, $TICK, and you will see your tick, okay? So with that said, I'm gonna go back here. Sorry, my chart kind of screw up now since I did that. Ay, ay, ay. Oh man, I gotta reset this. All right. Anyways, I'll reset it later. Yeah, I got it's all screwy now. So let me explain every little one of this means. First of all, this is your advanced decline. Think of it as your temperature, your body temperature, right? And I'm gonna describe it as easy as I can. This is your breath. This is your blood pressure. Okay? I guess that's a better way of thinking. Or maybe your oxygen. Okay? How you're breathing. And then of course this, your tick, is your heartbeat. This is the most important one. But this, with all these, will give you a tell. Will tell you a story, right? So when I see ticks, and if you can see my tick here, okay, I'm gonna just kind of max my cell here. If you see all this here, right? I have a zero line here, which means this is neutral market when it's zero. When it's balanced, right in the middle, up and down all day, it's a balanced market, right? But when you have like this, this morning it opens up here and it dropped, right? It was bullish, bullish, bullish. It opened up high and then bam, it dropped down, right, to the middle. Revert to the mean. It always revert to the mean with the tick. But you can see anything above 600 and above 1000, especially above 1000, is very bullish. Below 1000 is very bearish, right? Between 600 and 600 here, it's a lot of noise, which means it can be very choppy day. As you can see here, it is very choppy. Look at how it tried to hit 6 and up 6. You see how all these here? It's extremely choppy. You know, certain things are very choppy here. So, but you have the 0 to the 600 here, so it's choppy in a positive way, right? It's positive chop. But here you still have, you know, a lot of negative ticks here. Like towards the end of the day, look at that. It just dipped all the way down almost to 1000. But the buyers brought it back, right? So when you see this here, it just means a lot of noise, but more positive noise than negative noise. Whereas, you know, certain days, like yesterday, you kind of get mixed in the morning, and then it kind of got, or I'm sorry, Friday, it got mixed signal in the morning, and then towards midday, it's starting to pull back up, right? You see it? So it's all above the 0, and then right here, anything above 1000 is extreme. So which means it's really bullish. You see that there? You remember Thursday? Really bullish. Then it pulled back. Look at that, and then back to neutral. So again, this, remember, this is your heartbeat. You know, here you need you need a what you call it, they need to revive you with the with the metal thing in your heart right here, because it's dropping, and here it's popping right here. So anything above is popping really, really heavy. You can see here. Okay, and we'll go back to some of the days that were popping really good, like last week. I'll rewind back a little bit. So let's look at, now that, remember, this is your heartbeat, right? Now let's look at your temperature. Okay, this is, you know, when you're sick, right? When your baby is sick or you're sick, you know, and you have a high fever, right? You can either go really below or really high when you're cold and you're hot. This is when you're ranging in the middle, right around 0. It's a normal market. It can be very choppy, but it's a normal market. But when, like today, this is today, anything above 2000, and today it pegged 2300. Anything above 2000, I buy any dip, and I wait for a really heavy dip, and this is what I mean. When anything above 2000, I'm gonna wait for this. Okay, I'm gonna wait for this type of dip. When it reaches almost all to 600, then I'm gonna buy. Okay, so I wait for that. This is why, you know, I get in somewhere around here and I start buying. This is the best part to buy, is when it starts dipping below 600, so that I can buy it up, because I know the market's gonna go up no matter what, because you got more buyers than seller. Just basically what it means. Okay, so this, remember, is your temperature. Either you're hot or you're cold. You're sick, right? Sweating, freezing, sweating, freezing, right? So this is, remember, your temperature. That's what happens. So when you get to the red, you're really hot. You're really burning up. You're dropping. Okay, in the middle, you're normal 98 degrees. So you're fine here. So when the market is over exaggerated, which is right here above 2000 or below 2000, you're gonna see when it's below 2000, you can literally short any rally. And we'll go into the charts and we'll see. I'll show you. You can short any rally. If any rally start going up, you start shorting it. Okay, remember what I said about this. You want to see this when it start to be down here, and it pegged down here. You wait until the market literally here at this day. You wait until the market really peak right here. You see that? Then you jump in and you short it, and look at that. It popped right down. You see that day? That's the Wednesday of last week. This is Wednesday last week right here. See that? So you can see here it pegged under 2,500. So here, that means that this is the rally right here above 600. You just buy that. You short that, I mean, once it popped there, and it goes right back. Now this is, remember, everything needs to confirm, okay? You just can't have one. You need all three to be working together to confirm it. And this today confirms it for me, right? Why? Because of this. You see how it goes up? Look at the other days. Go up and down, right? You get a lot of reds in here, so it's a very mixed signal. But look at today, straight up. This is your breath. This is your breathing. You're breathing faster and faster, and you know, or slower and slower down here, because look, I mean, look at this. All red, straight down. Straight down. And look at that. See your temperature? It just completely dropped. And this is exactly what I told you. But look at this day. It ranged. And for sure, that was this day here. This was Tuesday. So I need to go back a little bit further. But it ranges here. Look at this. This is Friday, right? Friday. Here's Friday. It's right in the middle here. And it's starting to pop up towards the end. And same here. Starting to pop up at the end. Up, down, up, down, up, down. It was very choppy Friday. But then it's starting to pull back up. See it? So as you can see, your breath tell you a story. It's saying it's choppy. Your temperature saying, hey, I'm getting colder. That means that market's getting more bullish, right? And it confirmed right here. And same here. Look at that. Pass above 1,000. Okay? So that's give you an idea of exactly why when I say, hey, you can sell, you can buy, or whatever the case, because I can see it in the internals and how you can read it. Now, most of the time, I'm going to go here and I'm going to go on demand there. Oh, on demand. So let's show you an extreme day. I want to see an extreme day as to what September 4th. Let's go back to September 4th. What is on September 4th? What happened? Okay, so September 4th at, sorry, let's say 06. Nah, let's do 10. 10 in the morning. Sorry, I'm Pacific time, if you guys really haven't know. Notice I am in Pacific, so my time is a little different. Okay, look at this. Look at September 4th, guys. Here's the Friday. Look at that. It opens up here and look, it dropped. It almost pegged 2,000, but it didn't. So it's choppy, right? Same here on the Thursday. It's pegging down here, but it's choppy. So it hasn't fully below 2,000. Anything below 2,000 above, then I would say you can literally buy any dip or short any rally. But because it's not there, that's why, look at this. It's ranging inside. It's an inside. See it? It's just ranging. Very heavy ranging. Right? And here it tells you, here, especially this Thursday here, it dipped. And it dipped hard here. But that was a bit of a sell-off. But the breadth here tells you that this Friday here, look, it's kind of doing its thing. It's very choppy. It's not a great day yet. So let's find a better day. Let's see if a more massive day. Sorry, I'm looking at my chart here. Okay, so let's see what day this is. September 2nd. Okay, here we go. I found a day. This one is June 11th. Let's try June 11th. So, oops. Alright guys, look at this. I mean, look at this. 2,700. Okay, look at that. Right? And you see this below 600, right? Look at, you can see here 2,700. So if I look at this here, look at that. 2 positive ticks within the day, and it barely popped above 600. But look at this. You can, any stock that popped that day, you can short it, and you know for sure that you're gonna make money. Look, like this here. This pop above 600, I would have short right here. Any stock, I would have short. This is what I do. I usually wait for something to pop to 600, and then I'm gonna jump in to short it or to long it. Okay. So if it popped below, like today, Amazon, I pop it. It popped down. I bought it, and it went straight up. So, again, you can see these. You know, when it's in between these two white lines, I wait. I'm not gonna jump in, guys. We don't need to trade every trade. The less you trade, the better. What I mean by it is you want to find good trades, not just any trades. Good trades, and you can see good trades. Okay, look at that day. It gapped down heavy. Buyers pushed it up, but they couldn't push it up hard, and look, it just starts to sell off. So again, you can see it right there. I mean, those are the days when you go, I'm staying away from it, right? And look at the day before. Look, I mean, it popped above 600, so they're trying to get out. You know, this was basically a cover rally, right? I mean, buyers just trying to come in, trying to pull up the market, but they couldn't do it, right? So let's see a good day on a good pop, and I'll kind of show you what day this is. June 5th. Right here, look at that. Okay, here you can basically do any stock, right? You can buy any dip on this day, and you for sure know that you're gonna make money. Look, right here, I got little kids, guys, and that's why I'm trying to make this video fast. Anyways, you can see here it dipped 600. You can buy this right here. This is around what 9 o'clock, 10 o'clock, 10 o'clock. Okay, let's do this. Let's do this. Here's the SPY, right? 9, 10 o'clock on the 5th. Let's go in right here. Look at this. Here's your pop, right? 9, 10 o'clock right around here. Here's your pop. And guess what happened again? You buy this pop and look what happened. Drop, right? I mean, same thing with June 11th. I remember what I said, it was very negative. So I don't remember the time. Here we go. If you short this here, look, all of a sudden you saw how negative it was, right? Below 2,700, and you wait for a pump up. Look at that. And then you buy puts, and look, the market just sell off. It's guaranteed pretty much. Anytime you see below 2,000, 2,500 is a peg. If it's hit 2,500 for sure, no matter what, is almost 100% that it's gonna drop again or pop again. Just depends. Okay. So I hope this helps you get an understanding. Let me get a. I'm gonna pop this over here. I'll show you some places. Here's one that you can go use. ThinkScript. This site here. Okay, use ThinkScript. These guys have a lot of ThinkScript, especially this guy, Ben 10. He's the number one there, and this guy here. So you can get a lot of ThinkScript from here, right? So you can go in and type in tick value. Okay, and you can find the value of high minus open and minus low. You can find all these tick values, right? Let's see. I want the market. Let's see if there's a good one. Let's type in. Oops. Sorry guys. Let's see if this one has something here. So you can find a VWAP indicator. I mean, these guys, it'll show you how to do it, guys. If you don't, when I have time, I'll show you how to go in and add on these ThinkScript here. But let's do tick value. God, how come I didn't find anything? They have some here. Tick chart. So you can go in here and find a lot of stuff. Sorry guys, I don't have time to go through this. Here we go. Simple tick index for thinkorswim. I mean, let's see. See, here's the code, right? These are the codes to write your tick, but this is not good tick. I have here's a tick here, as you can see. But search for a good tick, because this tick I don't like that tick. Here we go. This indicator show nicely tick. When tick value is above 800 mark, consider overbought. When tick below 800 mark, is considered oversold. Yeah, I don't like that tick, but go ahead and look. Here's a good one. This is a good tick here, as you can see. So it's very noisy, but because you have a different, it's on a daily, right? So you can. I use 15 minutes. That's the best indication. You can use 5. It's very noisy, but 5 is okay. Alright, so just want to give you an idea of exactly what these does. As you can see, I can use 5 minutes, and 5 minutes it's quite a bit. So you can really tell when, if I use 5 minutes, I can literally pinpoint to the T when I can really, dip by, like right here today. Oh, is this today? No, this is not today, sorry. But look, right here, if it's a bullish day, then I would want to wait for the tick to pop and then short it, right? So right here would be a good pop, short here to drop it down. So guys, there's a lot of ways to make money and a lot of ways that you can read it. I have, my setup has been very old, and this has been a very proven quad for me, and all the think script that I use here. So I don't change it. I mean, you guys can look for yourself. These lines here, I drew it myself. It's very easy to draw these lines. If you want to do zero line, just right click it, right? And you just add a drawing, right? That's just basically it. So you just add any drawing, click that drawing, then you just right click here and you edit properties, right? And then right here you just put value at 0 and 0, right? Or value at 2000, 2000, okay? And the style, what do you want? You want straight line, you want dotted line like me, or really dotted line like right here? And the color, right? And how thick it is. So again, it's these lines I drew, because on the tick chart it doesn't have all this. It just have, everything's blank other than here. Everything's blank, so you got to draw it out. Same here. Some think script do have it, but most of them don't. So I drew this, especially the zero line. This one I program it inside to being on a red day it'll be a red zero line, it'll be a green day, it'll be a green zero line. So there are a lot. Now you can see here, okay, this is the racial line. As you can see here, it's normal choppy day, just a normal day. But when you see really heavy action with the breath here, it's breathing heavy one way or another. See how high it is up here, heavy breathing here. Basically it means that there's more action within the buyers or sellers. Okay, so anyhow, hope this helps, and we'll go from there. Good luck, guys. I mean, this is gonna help you with your trading days really a lot. It helps me in determining when I really go in heavy. So today I went in pretty good with Amazon and I made good money. So but again, I don't trade every stock all the time. I concentrate on probably 5. That's it. Tesla, Nvidia, Amazon, Google. So that's pretty much it today. I mean, today I add an extra, which is Square. I pop up in Square this morning, but that was about it. So I try not to overlook at too many. You guys look at too many charts. I would, to be honest with you, I would trim it down. 5 max every day. If you think, if what you're gonna play it. I mean, I scalp these guys like there's no tomorrow. I mean, I love Amazon. I scalp Amazon every day. That's just my go-to stock, because I can see what it's doing, and especially days like today, I can really see the movement and how. I mean, today it popped back to what, 31.20 something. Boy, I got in. I mean, a few, $5, $6 off, but I got in perfect, and it popped, and it really popped up. So again, guys, it's not. A lot of you guys ask me, how do you time the market? Listen, there's a lot of ways to look at internals without having to, because charting is very tough. I mean, you look at bars, and how are you going to decipher today's a good day, today's the bad day? But if you have something like this to help you make more of a decision and how you can handle your day, hey, it's a winner, right? So have a good night, and good luck trading. Bye.